Hey everybody, how we doing? Okay, so welcome to the channel. This is Jay Lux. If y'all don't know me, Jay Lux. My name is Jay Lux. I'm a six-figure day trader. I do trade futures. Been trading for about 10 months now. Been going very well. But for those who don't know, the ICC strategy is a three-step strategy. First step, indication, correction, continuation. Only those three steps. We obviously know in the futures market we have uptrends, downtrend, and consolidation. We're not worried about consolidation because you should know what consolidation looks like by now. But let's get to it. So in an uptrend, we obviously have higher highs and higher lows and higher highs and higher lows characteristics, right? We obviously know those are the characteristics that we have in an uptrend. So how this video is basically going to be a rundown on how I mark up my charts in under 10 minutes. That's just what this video is going to be about. Specifically on how I mark up my charts. That's it. I hope this will help y'all a lot because y'all are getting a perspective of how I personally mark up my charts. So again, we have an uptrend and we have a downtrend. For an uptrend, we obviously start with a low, a high, a higher low, and a higher high. We got this breaker structure to the upside, right? So we would have marked this up right here. This would be our level of interest. This would have been our level of interest. Level of interest is, it could be point of interest, level of interest. What level of interest means, the the level it broke out of. So remember, each 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 low and each high has a level. You see right here. Let's say for example, at this high, it has a level. These are levels. This is numbers. So I would say the highs. We know that sellers are sitting on top, so that would be a level of sellers, and at the lows, buyers are sitting at the bottom, so that would be a level of buyers. So potentially, yeah, I mean, not potentially. I'm sorry. What am I saying? Yeah. So that's what level of interest will mean. We broke out at this level, so this would be our indication, and we will. You can mark the recent, however much you want, but this will be our level of interest. So this was our indication, as we see indication. Have it marked up right here. Again, in an uptrend, we need to make higher highs and higher lows, right? So, would we get in on the indication? No, that's FOMO. That's using emotions, revenge trading. Not revenge trading, but FOMO. You're a breakout trader. We don't want to be those, right? Before we take an entry, we need all steps to play out. Indication, correction, and continuation. Correct? Okay, got it. Okay, we got our first step, right? After we get the first step, what comes next? Correction, right? Correction. And correction is basically grabbing liquidity. If you hear that around a lot from a lot of people, it means grabbing liquidity. What liquidity means, it comes down to grab people's money to break higher, to break this next level. To basically break this level and the next level and the next level and the next level. If it wants to continue higher. To cut it short, liquidity just means correcting. So basically, I'm sorry, a correction is just liquidity. It's going down to grab liquidity, to grab people's money to go back higher, of course. Because the market is not just going to make a high, keep going high and high and high. It has to make the characteristics. It has to make a higher high, higher low, higher high, higher low. It's not just going to go perfectly and shoot all the way up here. Like it has to have its steps. Like each pattern has its steps. As you see, this has its own steps, this has its own steps, right? It goes step by step by step. So that's where we have to pay attention. So okay, we went down to make the higher low, right? So this was our indication, this was our correction. As we see right here, we have it marked up. Correction. This is our correction, making a higher low. And then we once we're back, okay. So we broke out of this level. That was our indication. we came back down to retest the level, of course, to grab more money, blah, 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 whatever you want to call it, whatever you want to say, just to come back, grab more money down here to shoot back higher and stronger, right? So as soon as we were back above here and we get a close, that would be our entry. That would be the continuation. And we will target the 4 hour indication. So this would be our target level. That will be our next, our first target level. That's why I have it here marked up target. So this is characteristics of an uptrend, of what you should expect of an uptrend, how to trade it, what steps does it have, what to look for. Okay, now let's go to a downtrend. In a downtrend, we clearly know we start with highs, lows, lower highs, lower low. But we broke this low, right? So what would that be? An indication to the downside. That's an indication. Have it marked up right here. So right here, we could have marked up our level of interest right here. Again, call it what you want, but I call it level of interest. All we're doing is just marking it up to stay on track where it broke out of. So okay, we got our indication. That's the first step. Now we need the second step, right? Correction. So we need to go back above this level to grab liquidity, grab money, correct, and grab money to break this level, right? But remember, every time it corrects, it either goes up depending what market you're on. If we're selling, we're gonna go back above. If we're buying, we're gonna go back below. So selling right now, this is selling. We're going back above to grab some money to come and break the next this level of this lower low. I mean, so we're coming back above to grab money, grab as much money as we want to come back and break this level. So indication, correction. This was our correction. We have it marked up. Once we're back below this level and we get a close, that would be our entry. And this would be our target. Oh my god, I didn't have it labeled. I'm sorry, y'all. Where is it at? There we go. That would be our target right here. So this would be our target. Who's this? Is that mom? Look at that. You're so talented. Okay. Okay, guys. So yeah, this will be our target, right? We will target once we're back below this level. This will be our entry. We could take an entry on the 5 minute, and we will come and target that 4 hour indication. This was our 4 hour indication. That's why we have it labeled target right here, because that's what we will target. Then again, it just keeps creating lower lows, lower highs, and again, if it keeps continuing down like it wants to, then you could keep on targeting the next level of sellers, buyers, or buyers, because buyers sit at the bottom, sellers sit at the top. So yeah, you could keep targeting the next level of buyers if it truly wants to keep going down. Remember, when marking up, focus on the 4 hour. Focus on the 4 hour and the 1 hour time frames. Why? Because the 4 hour is going to tell you your overall direction, what the market wants to do for that day. If it wants to sell, if it wants to buy, or it either doesn't want to do anything, right? First thing first, we want to know our bias. We won't hop in a trade without knowing our overall bias. We want to know the bias. So that's why we gotta focus on the 4 hour and the 1 hour time frames. The reason why we focus on the 1 hour is because that gives us the trend characteristics of our correction and when we want to change back up or change back down, depending what market we're in, right? Okay, once the correction is complete on the 15 minute and the 1 hour, you scale down to the 15 or 5 minute, depending what time frame you enter on to find characteristics and support of the overall trend. Okay, I hope y'all got this. Y'all could go ahead and screenshot this. If y'all need it, let's go and hop on these charts. So we're gonna go over gold today, but let me switch to GC. so that we don't have this mess over here. Okay, so remember this video is specifically about how I mark up my charts. Okay, so let's say we were to wake up. What should we do? Let's go ahead and do this one right here. Go ahead and do this, yeah. So let's say we were to wake up in the morning, mark up my charts. Again, I'm looking at current price. This is price currently forming right now. So this will be our recent low, recent high, previous low, previous high, right? But again, I don't mark it up like that. Really, I just focus on if we broke any highs or if we broke any lows, because it's the same thing. If you were to mark it up right here and right here, I mean, well, previous, recent low, recent high, previous low, previous high, right? If you were to mark it up, you got your indication, correction, continuation, right? Same thing. This could be a continuation is always the indication. It keeps going and it keeps going. But for example, let's say we wanted to mark it up like that. Okay. So yeah, let me go ahead and do that. Okay. Okay, cool. We have our levels marked up. We got our previous high and our previous low, right? So let's go ahead and put previous high and previous low. Previous high and previous low. Cool. Okay. So we want to look again if we got a break either up or down. Where did we get a break? To the upside, right? The 4 hour. Remember, the 4 hour tells us what the overall trend is for the day. It broke to the upside. Okay, cool. We're buying today. So on the 4 hour, we got the indication, we got the correction. So on the 1 hour, we want to see the characteristics of that downtrend. Since we're correcting down, right? Lower low, lower high, higher low. Okay, cool. Yeah, that's how I want to mark it up. That's the correction. Oh, I'm wrong. I'm wrong. Let me not confuse y'all. Okay, we're marking up, right? We're marking up. So this is how I would mark up my charts in the morning. This is how I will mark it up. Okay, cool. And what y'all could do is y'all could always do this. Where is it? Y'all can always track out your level of sellers and level of buyers. So right here, what caused this big move up here? This right here, right? So I could mark this up right here. This could be like my resistance and support, just to track my level of sellers and level of buyers. And what caused this big move? This right here, right? So this could be the next level of sellers right here. Next level of sellers. And we could just keep going right here. It's the same low right here, so we could just do something like that. And right here, what caused this move to happen? This move. This move went up, this move went down, this move went up, this move went down. It's basically just level of so sellers sit at the top, buyers sit at the bottom. Go ahead and type that. And level of buyers, level of sellers, and level of buyers, right? And as well, we could let's see what else can we mark up? Hmm, 4 hour. Let's go ahead and do this one too. This would be a level of sellers as well. Oh my God. Okay, level of sellers and level of buyers. This could help you stay on track to let you know, okay, when we're above here, how do buyers react? Do we tend to push price up to here and we always stop right here and go down? Like, you know what I mean, guys? Like, okay, let me break it down like this. So what this lets us know, it helps us keep track of where sellers are sitting at and where buyers are sitting at, right? So sellers are sitting on top of here, right here as well, on top of the highs, on top of the highs. Where our buyers sitting at? On top of the lows. I mean, at the bottom of the lows, at the bottom of the lows, right? Okay, cool. So this just lets us know that when price is above here, it has potential to go up until here, right? Because as of right now, we only see that it has potential to go all the way up here and stops. You see right here too. Same right here. You see why this could have been another confluence right here. So when price went up here, oh right here too, right here too. Okay, this could have been another one. So when price, this is level of what buyers. Oh my, what's going on? Let's just leave it like that. But this would be level of buyers. So price shoots up right here and it stops right here, right? Price shoots down right here and we broke out. But buyers are sitting right here. Buyers push price up, sellers push price down. Buyers push price up, break out. But again, as we see right here, price did not break above. So we know that we want this is the max that buyers could go up to. Like this is the max where they stop at. So what we want is a break out of it, basically. Mm, yeah. We would want to break out of it. Okay. So yeah, we would want to break out of it. So this is just to keep track of where buyers and sellers are sitting at. Just to keep track, you know. Okay, so for example, right here, we marked up our chart, right? We had an indication to the upside, a correction, right? Boom, we got a correction. So this is how I would mark up my charts. This is how I would mark it up. So step by step. So okay, so we got our first step, indication, correction, right? And right now we see we're continuing. Okay, so let's go to MEQ now as well for here. Okay, let's say for right now, let's say I was to wake up right now and I want to mark on my charts. This is current price right now, recent high, recent low, previous high, previous low, right? Okay, let's go ahead and mark that up. Okay, and boom, we got an indication to the upside, correction. Again, a lot of people would have thought we were selling just because we broke this higher low. But remember, I think it was Trump when he was speaking that he had caused the market to come down like this, right? If I'm not wrong. But as we see, we're still going up. Who knows? I don't know, to be honest, because I don't trade Nasdaq like that. If I do, it's when she be acting right, you know. But she be bipolar. But okay, previous high. We got our previous high here, our previous low. Previous high, previous low. Cool. Bread and butter. You feel me? All right, boom. We got our indication, correction. We're now continuing. So again, that's how I would mark on my charts. You don't have to mark it up all types of crazy stuff. But again, if you want to stay on tracks with where the level of buyers and sellers are, go like this. Okay, so okay, let's start from here. We have a high, we have a low. Right here at this low, what caused this move to happen? This low right here. So boom, would have marked it up like this right here. So this is where this is a level I know that buyers are sitting at. So level of buyers. Okay, then we have this high. We know that sellers are sitting on top of the highs, right? So we can mark that up. Put this right here. This would be a level of sellers or buyers. Hold on. What do we? Okay, level of buyers. Okay, then boom, we came back down, creating a higher low, and we got this big move. What caused this big move though? This right here. So we could have marked that up right here. Let's go ahead and mark that up. Okay, this would be level of buyers. That would be a level of buyers, right? And right here, we see we have a high. And we got this big move down. What caused this move though? This high, right? Don't worry, y'all. If y'all are confused, I'm about to break it down. So this is a level of sellers. Okay, that's how I would have it marked up. And you see how it all is all making sense. I'm about to explain how it's making sense. I'm not a good explanation guy, but I would try my best, guys. Y'all probably got confused somewhere around this video, but yeah, okay. So this should be very clear. Okay, level of buyers, level of buyers, level of sellers, level of sellers. Remember, let's remember, guys. Sellers sit on top of the highs, high, high, and buyers sit on below the lows, low, low, low. Right? Okay. So what I know. Okay. How do I say it? Okay. So what this helps marking up your level of sellers and buyers is when price is right here, how does it react? As we see right here, price like we could look at the previous reactions of what the market did. So we're right here currently, and we're right here. I could say okay, we're in between this level. I go down to I look to my left. I see right here when price is here, it always tends to shoot up, right? All the way to here. So when price is above here, price always tends to shoot up right here, right? But when price reaches right here, it does not just shoot up, it stops right here and it shoots down to correct, right? As we seen right here. It comes and corrects. But half of the time depends if there's a lot of volume or if there's strong buyers. Sometimes what buyers will do is they'll shoot up, break out of this level, keep going, and they will correct back down somewhere right here. And they'll stop right here and just keep going and keep going. Again, that's basically just what it is. What it'll help you with, like, I'm not a good explainer, guys. Like I said, I don't know how to explain it good, but I hope y'all understand. But yeah, so again, a low, a high, higher low, higher high. Overall trend on the 4 hour is bullish, right? So we did get it. We did get our indication correction. We're now continuing as well as we see. Oh no, I'm wrong, guys. This is NQ. I'm wrong. So yo, I'm wrong. My bad, guys. So it was an indication to the downside. So we did break this low. So when we broke this low, the trend got invalidated. That would have been a new indication, correction, and a continuation. You could have targeted this low, this 4 hour indication. And then again, you went on a correction. You could have targeted this indication, but as we see, it shot all the way down. But yeah, I hope this helped, guys. If not, let me know so I could just work on it, drop a better video. I hope y'all understand. But yeah, see y'all later.